Obviously, the least advanced thing to do is just sell and just hold cash.
You know, like we have so much debt, like national debt, consumer debt, both on just like a notional level and as percentage of GDP.
Every single thing that we all talked about today is possible because of that sound. It's possible because of that connection to the internet.
I feel like the Democrats are going to get somewhat of a free pass here. They were already kind of talking about it even a week before the invasion started, and they're certainly going to run with it now. Does that mean they're going to get the shellacking or not? I'm curious.
I have an Alexa in my bathroom, and I asked Alexa a question while I was showering. It was some calculation or measurement or something. And then I went and I did another stat. And the next thing I knew, I was like 3 questions in with Alexa. I'm having a conversation with a fucking AI while I take a shower. What in the fuck? Welcome to the show, everybody. We are excited to be back. There is a lot of stuff happening in the world in many ways in the macro. And there's also not a lot of stuff happening, especially in crypto. And we're going to discuss all of that. We're going to kick off with this Alfalfa Fire round. Quick announcement. Our Discord is officially open. The link is in the description below, alfalfapod.com. Our Discord is completely open. Anybody can join anytime. And hop in the party. We're like fully doing it. And like we mentioned in the last episode, if you want to get involved with the community, you want to help us out with the show in any way whatsoever, pop in there, send us a message. DMs will be open, and we're going to take this thing to the next level. So, let's kick off with the most recent review, Nick.
We got a good review from Garrett Hoyos. The balance of wisdom and raw authenticity from this podcast goes far beyond friends discussing crypto on an exploration of the human search for happiness. It's a long one, but I'll read the last take. Is if you're looking for a down-to-earth conversation, these might be your technological spirit guides to making better choices, including stepping away from it all. So, Garrett, thank you very much. Saw your review coming on Thursday. Keep them coming.
Thank you, sir. Yeah, that one made our day for sure. It was a beautiful review.
He's talking about you, Armand. I think he's talking about you with your second phone.
Hold on a second.
Stepping away.
Hold on. That's for later. I got an update on that. But no, come on. It's all of us. It's the compilation, the confluence of our personalities and wisdom. So yeah, thank you, Garrett. Big shout out. If you want to leave us a review, you can drop stars on Spotify, but to actually leave a written review, do that in Apple Podcasts. That's the best place to do that. Cool, boys. Let's kick off with the Alfalfa Fire round thing. I don't even know what to call it. We're terrible at branding. Steven, you go first, because then, we'll look good right after, right? Not at all.
Oh,
we'll look terrible.
Yeah, I mean,
you got all the alpha.
Yeah, last week was another depressing week in the markets. We had that little hopeful scam pump, but as soon as Barry Silbert tweeted that he was buying, predictably the entire market dumped. I was really tempted to short that tweet. Actually, I really wish I did.
He gave it to us last time when.
Yeah, I don't know what you guys are talking about right now.
Barry Silbert's he's a big guy in the space. He started Grayscale.
Oh,
Grayscale Bitcoin Trust. Yeah, he's famous for that gonna be a big week tweet from like
he screwed us so much
November, which is right, basically the peak of the market.
He gave everyone a taste that like GBTC, the ticker you can buy in the stock to buy some Bitcoin, was going to be converted into an ETF, and that's what everyone was assuming. And yeah, that was not even close to happening.
I mean, basically, if you just fade everything, the alpha of this week is fade everything Barry tweets, because you'd be very rich if you just followed that strategy. No, I mean, I've just been watching the markets and trying to figure out when I'm going to get back in larger size. I'm like heavily in stable coins personally, and in my risk-on portfolio, it's very heavy in like ETH. Like I've definitely been selling down a lot of the altcoins, because if we people don't realize this, some new people, but even though stuff is like down like 60-70%, like if we go full bear, like it can go down another 50, 60, 70, 80, I think sometimes people are like, it's already down, like who cares? But it could be a big deal to like save half of your remaining capital if that's the case. So I kind of think like Bitcoin, ETH are the best things to be in if you want to be risk on right now, because like worst case scenario, if the whole market tanks, then well, you could always just convert some Bitcoin or ETH into Matic or whatever your little altcoin of choice is. But like if all your assets are in the really kind of like out there shit coins, and then those go down, you have no options other than to just, you know, be in it for the tech for a few years and hope everything comes back. Also, just been trying to like think through some more bear market farming strategies, right? Like how to get more yield from the capital I do have. Stablecoin yields have started to really go to hell. You're seeing like almost nothing now on ETH mainnet, and I don't think farming stable pools is quite what it used to be, and I think there are better strategies now. But we could talk about that later. So yeah, that's what I've been doing all week.
Cool.
Awesome. Hit it.
Take the next one. Yeah, I mean, mine's pretty simple. I think probably most people listening should probably take the same alpha this week, and it's do nothing. You know, a lot of bad decisions during a bear market can be made, and I feel like we're in a little Goldilocks. Like we're obviously in a bear market feel, but this isn't, you know, as bad as it can get. So I'm just standing on the sidelines, watching, observing, trying to understand where the risk is and how much we could go down. So I've talked about in the Discord, but there's a few strategies in this thing, and stick your head in the sand is one of them. And I feel like right now it's a good choice for me. You know, I don't day trade, make trades every day, maybe once a week or even longer than that. So for me, doing nothing feels like a safe decision right now. I'm gonna sit and watch back. But curious. You know, we've always talked about the stablecoin yields during a bear market. So I think it's something we should follow, you know, because, you know, when everything's bad, can you yield off your stables and produce a return that beats the stock market when crypto's in a bear market? So that was interesting, Stephen. I think we should keep up on it, something to keep tabs on.
Yeah. Okay, let me piggyback off Nick. So Nick shared within our Discord something really cool. Like I think he just talked about it, but it's like it's in a bear market, you either move to cash or you bury your head in the sand and hold on to your coins and just wait for better times. I think there's like a third category you can do, and that's what I'm doing, which is like I'm trying to reduce my beta while still like I'm taking action to reduce my beta while still holding the things that I really believe in. So like I want to hold my ETH forever, and I want to stake it. I want to earn 10+% yield on my staked ETH, but like I want to be short the market too. So how do you do that? Well, like ETH is highly correlated to stocks. So I'm like I'm short selling shit stonks that are trading well above market PE multiples that are like not having like the same growth that we were already pricing in. So like the S&P 500 is trading at 23 times earnings right now. That's going to compress. Like we're about to go into a recession. I'm thinking that multiple is going to compress and earnings are going to go down. So like assets in general can still go way down from here. Does that mean I want to sell ETH? No, like there's a few assets that I believe in that I want to hold for a long time, but I can still play sort of the other side on the downside as well. And part of that has been stables, but like it's a great point, Stephen. Like I've been holding stablecoin yields in LP pools. I was earning 14% 2 weeks ago. Now I'm earning 6% because everyone just keeps piling in. And now we got to find something to do with that cash. So that's actually a great topic.
Can you give me an example of one of your shit stonks? Like what's a good example?
Here's the one that I really dove into. It's ticker symbol BFTR. It's the BlackRock Future Innovators ETF. It's like a amalgamation of shit stonks. It's just like a great pool of shit stonks, and all of them
sounds like ARK. Is it ARK?
Yeah, it like ARK's down even more, but like ARK at least has like Tesla in it and stuff. But like this is just like the furthest shit stonks out on the risk curve, and you know I'm happy to short that long ETH and have my beta remain a bit lower. And you know,
here's an idea for you. Have you looked into short farming anything on Mirror?
I have, and particularly on things
Is
that
there anything good? You get paid
Absolutely.
like 20% to short. That's
absolutely,
pretty sexy.
particularly on things that you hold long in your portfolio. Like, because while I'm saying I'm a really long ETH, there are people that are really long Tesla or really long Square or really long Apple, and you can like play the short side on Mirror, earning your yield on Mirror while you're long as well. Capture your yield. I think that's a good way to play, but pretty advanced for the average user. Get in our Discord. We'll talk all about it.
So, I mean, there's some stuff we can do that's not I don't know, obviously the least advanced thing to do is just sell and just hold cash, which kind of sucks because you pay tax if you're I haven't really sold anything, right? Because I don't want to pay tax. So I'm looking to do stuff like you said, which is to sort of just reduce just my long exposure to the market. So there's a few things I've done. Like the most basic one I've done is to just short really shitty stuff, like stuff on Solana, right? That has $90 billion fully diluted valuations. Like the scam VC coins where the float was really low, but then there's $1 trillion of coins in the background that are kind of waiting to be released, and now that the market's turning, all the VCs are dumping, and these things are just sort of going into the ground. So those are fun plays, right? You can kind of short a bunch of the crappy coins and then keep your long ETH. I think my favorite play right now though is to do short farming with the liquidity pools, right? So, and to do this with the blue chips. So it's actually not a hard strategy to execute, right? Because if say you want to keep a bunch of ETH, right? You don't want to sell your ETH. But a coin like Phantom, right, is going to probably be higher, beta than ETH on the down, right? When the market tanks, Phantom's going to tank more than ETH. It just is, right? So what you can do that's kind of interesting, and right now Phantom is actually a really great place for this strategy because the yields are really high. Yesterday when I checked, you could get 200% APR in a spooky swap Phantom stablecoin pair pool, which is just insane. So what you can do, and it's really simple to do this, is you lock your ETH in Scream or Geist or one of the lending protocols, and then you borrow a Phantom. So say you get $10,000 of ETH. Well, you can borrow $6,000 or $7,000 worth of Phantom, or whatever however you want to maintain that position, and then you could sell half of it for stables, and then put it into one of those pools. So what you've just done is you've created a semi-short position because you sold half of your Phantom. So if Phantom goes down, the market goes down, you're going to profit on that. But then that position is also right now paying you 200% a year. And look, realistically, that'll probably compress to 30 or 40% in the near term. But it's it's kind of this cool position where if the market goes sideways completely, well, you just make 40%, which is good. If the market goes down, well, you make 40% and you make money on your Phantom short, right? And if the market goes up, well, you lose money on that, but you're kind of happy because your larger ETH position is going up more, right? It's a nice hedge. It takes a lot of mental weight off. You become a little more indifferent to what the market does, and then you gain a little more clarity to make those decisions, right? You also have flexibility, right? If the market really tanks and you're in one of these pools, what happens in these pools when the market tanks is you get more of the coin that you put in, the Phantom, right? So if the market tanks, you're going to end up with tons of Phantom and less USDC because the pools are going to balance out, so you have a 50-50 ratio of both.
You're buying,
and if that happens, yeah, you're sort of buying the dip automatically. And then what you can do is you could either just let that kind of come back to even as the price goes up, or you could be nah, I just want to hold this coin now. You could pull all of your liquidity out of the pool. You can keep the Phantom. You now have more Phantom or more AVAX or whatever coin you're farming, right? And when you ride that up, you've got more money, and you have more coins than what you borrowed, and you kind of book that profit. So it gives you all this flexibility to do interesting stuff, to avoid paying tax, if you've got these kind of gains on your larger position. So that's a lot of the stuff I've been thinking about doing, and I've been doing some crazier stuff that's probably not suitable for this.
That was even that was a free tutorial. That was a free tutorial on how to short crypto tokens. That was good. That was good.
Yeah, it's get paid to short. You're getting paid to short basically because you're getting paid with that interest in the pool. It's a cool feature of crypto that doesn't really exist anywhere else. You can't really do that in your stock brokerage account. Can't really get paid to short Microsoft and provide liquidity. It's just not a thing.
I'll check with the JP Morgan advisor just to verify, but yeah.
I mean, so was that like an Alfalfa fire round or what? What was that? That was. I didn't even get to go. Like, you guys
can go now.
You guys don't do structure. Like,
Hold
can
on.
we
First
just?
of all,
That was
we
ridiculous.
did 11 minutes. We did 11 minutes. That's the quickest fire round we've ever done.
I haven't even gone.
You got plenty of time, but like our previous record was 14 minutes. If you can go quickly.
That was I don't know what that was, guys. You guys literally need a true dictator. Like, we need like timers, dictator. It's like your turn.
We need Steven's advanced strategies to go in the Discord.
Steven had already gone once.
I apologize.
Then Eric went. First of all, I won't allow it. I thought I was going to allow it. I'm removing the whole thing from the recording. You see, you don't realize the power of post-production, Steven. Okay.
Let it rip, my friend.
Yeah, that was like too deep. I'm like lost now in that thought. Okay, so Alfalfa for the week. Financially, mine is very similar to you, Nick. It's a sit, wait, sit on my hands, watch what happens. Don't make any emotional decisions. Don't sell anything that I currently own. I am not a trader as well. I mean, my moves are more like once every 2 weeks maximum. So for me, it's like there's nothing that I would need to sell at this point anyway. And so to react emotionally against it or to try to find some advantage in this market is not for me right now. The main thing I've been thinking about is like general life alfalfa with the chaos of everything going on lately. You know, we talked about war, Ukraine getting invaded in the last episode. We talked about the threat of nuclear and that discussion, the fact that those words are even being mentioned. I've been thinking a lot about the amount of information we have access to. So I'm kind of planting a seed for later in the conversation. And the main thing that I've taken away from all of this is how important meditation is. And I actually started my daily meditation practice that I have not been on for quite a while. I think it's been at least like 6-7 months since I consistently meditated. And I'm doing a little experiment to see how that goes and how I feel. And I'm already 3-4 days in, and it's an incredible impact. So it's kind of part of my whole game plan of what I've been really experimenting with lately, which is an information diet, which is removing the drug from the system by having that second iPhone. I'll talk more about that again later. And ultimately becoming the observer of the thoughts again, because the thoughts had really started to take control, and I was identifying with the thoughts, thinking that this is actually reality, and not realizing that what I was focusing on was just completely taking me away from what I really cared about. There's only so much you can care about in life. So planting a seed, that's what I've been thinking about. And I've been going really deep on that topic lately. But okay.
We get insight into your protocol. Was it like an app, or you sitting for 10 minutes? What are you doing? For the meditation.
Oh, I just do I usually do guided meditations. Yeah. I do cool. Usually 20 minutes. I pick like something random off Insight Timer app usually. That's my favorite meditation app. And or I just listen to like a outdoors? Background sound. Both. I can be anywhere. Usually unclothed. Usually not clothed. Yeah. The freer the better, you know. The freer the better, the natural state. Connects me to Mother Earth. No, I'm not very woo woo about it. I can even be just like I've experimented with like Tibetan Buddhism style meditation as well, where your eyes are just open and you're doing what you're already doing, and you just find little pockets of meditation. But when I'm actually meditating, it's like 20 minutes, sound on, guided. Yeah, we can talk more about it.
Watching red charts go down and to the right, is that part of the observation?
It's observational meditation.
Yeah, that hasn't been fun. But okay, let's dive in. Let's kind of open up with one of the more pressing things that someone's had on their mind, and whether it be a question or a discussion, let's dive into something.
Steven, can you talk about this Bretton Woods article you sent us in the chat? I want to dive deep. I have a lot of questions. I think I might need some context from you.
Yeah, it was a just like a letter put out by apparently he's a relatively well known. I saw people referring to him as his first name, Zoltan. Yeah. He's like, oh, Zoltan wrote something. I'm like, I don't know, I've never heard of the guy, but
yeah, you don't mess with him. You don't mess with him.
Yeah.
It's from a movie,
right? Yeah, no, Zohan. You don't mess with the Zohan.
Oh, so yeah, that's right.
Yeah. Anyway, you guys know Bretton Woods, right? Like Bretton Woods 1 was the advent of basically the destruction of the gold standard in the 1970s. Kind of like a pivotal moment in history, right? You ever look at those what the fuck happened in like 1971, that website?
Oh my god. Can we please link that in the show notes or something? That website is awesome. It's awesome to see.
Yeah, is that the year WTF happened?
In 1971.
1971, right? Yeah, WTF happened in 1971.com. I actually think this should be like required viewing for everybody who listens to this podcast or just who just exists in life generally, right? It's like, it's super interesting. It's just all of these charts, and they sort of relate to this seismic shift we had, where we just basically told everybody that they couldn't redeem the dollar for gold anymore, and it was over. We're going fiat, right? And not to get into it too deeply, but like the very first one on the page is the growth in productivity versus hourly compensation, right? So how much do people produce versus like what are they paid? And from 1948 to 1972, like these two lines are inseparable. It's like a super tight correlation. And then basically since 1971, the compensation line is completely flat. And the productivity line has gone up, right? And this just shows you that like people in general are getting paid like way like less than 50% of what they used to be paid per like unit of production that they have. And like we have all these.
Do you have any thoughts on that, by the way? Like just that one in particular? Because I think it's because you're getting compensated in sort of like shit dollars. Like you're getting compensated in like a shit fiat. So like that is the reason why you're not getting paid for your productivity anymore, because the shit fiat is worth less as you go forward.
Well, there's just something about the change, right, when we went to fiat that has basically enabled capital versus workers, right? We've sort of really put our foot down on the pedal of, okay, capital is going to now grow exponentially, and then like the wages haven't kept up. They've either grown linear or stayed stagnant, right? And this isn't all fiat in my mind, right? Like it is kind of stark how it happens there. It's a huge portion of it, but there's other things that have happened too, like globalization, for example, right? We didn't have like the same degree of like outsourcing to China in 1971 that we have right now, right? So that puts like tremendous downward pressure on wages, because like people are producing the same, even higher, but the pool of people who are now like producing stuff worldwide is obviously like much larger, right? I think like all the Bitcoiners and people in that particular camp are right. Like what happened in 1971? Oh, we went off the gold standard. We embarked on this like new era of fiat money, of the idea that the government can just literally create money out of thin air, right? It's a definition of fiat, right? It just exists because it is declared to be so. I think a lot of this has to do with. Are you guys familiar with the what is it? The Cantillon Effect? Is that what it's called?
I'm not.
I think it's called the Cantillon Effect. It basically refers to the idea that, like, roughly summarizing it, the closer you are to the money printer, the wealthier you get, right? So in 1971, we went off like the gold standard, right? And we invented this idea of just printing money, right? But it turns out that like people are different degrees of separation from the money printer. We really saw this in COVID, right? Like what did the richest like 50 or 100 people in the world, right? What did they like double their wealth on average? Like these like multi-billionaires, they double their wealth in like a year. Why? Well, it's because they were the ones who were closest to like the free free grab bags of money come down. Like this, at least this time they had the decency to like actually mail people actual checks. Like remember in the 2008 crisis, right? Like the world nuked and we basically just bailed out all the banks. We sent people nothing and foreclosed on their homes, right? That was like
and banks are the closest to the money printer, right?
Yes,
I think
it's no coincidence that like banks and all these people closest to bank, like anything related to banks, like stocks, assets, right? That's the big thing about 1971 is we shifted to this new paradigm where you got wealthy by owning assets instead of like producing stuff, because assets just went up. Like all this money that was created just went into assets and kept going into assets, right? And then we did this thing where we kept like lowering interest rates to keep like kind of foregoing these economic crashes and to tune the economy. But what did that do? It just made it easier to leverage and buy more assets. That liquidity just flowed into assets, right? And we just have this gap now where the people who are labor workers who don't own assets are just like flat or not doing anything, and all the capital, the people who own capital, people who own assets, it's all going to the moon, right? So that's what the fuck happened in 1971. That's like a frequent thing we talk about. But yeah, everybody should go to this site. Like some of these charts they're just like absolutely, they're absolutely nuts. Like
they're amazing. I spent like half a day on this chart, just like analyzing each and every one of them, because they're like each next one is more exciting than
like
the
next. Here's a super interesting one: average black income as a percentage of average white income. Like we have this idea in our heads that like we've been like black people have basically been held down since slavery, and there's been like no progress. But like what's interesting is that if you look at like the time from, you know, the post-slavery era up until like 1970, yes, it's true that like these people were very badly put upon and started from nothing, right? But if you look at the growth of like wages, for example, you chart that, it's a straight line up. Again, this is black income versus white income. It's a straight line up. And then in 1970, it just goes flat. It just goes completely flat. Like we were making more progress with equality in the 50s, like according to this chart, than we are today, right? And are we supposed to believe that we're more racist?
Counterpoint to that would be like this shows exponential growth in the 1950s and early 60s. That's like civil rights movement. They're coming off a very low base. Like it's very easy to see like exponential growth coming off of a low base during the civil rights movement. Like that is a counterpoint.
No, this starts in the early 1900s, right? It actually flattens at the moment the civil rights movement happens. Like when was the Civil Rights Act? Like in the mid 1960s? Late 1960s?
Am I on mute? Like civil rights movement like started in like
64.
But the actual Civil Rights Act was in 1964, right? So when the Civil Rights Act passed, like this line goes flat. And it's not related to the Civil Rights Act, right? Like obviously the Civil Rights Act didn't cause this to flatten, but something else happened at the time, right? And I think it's like interesting to dig into that. Like the stats are the stats, and it's interesting to talk about why. I have no doubt that there are multiple confounding variables, but like it's just totally. Like there's like a lot of interesting stuff here.
And I don't want to focus on this one too much, but like the chart does go up and to the right over time as you get closer and closer to 100%, meaning like a black income is close to a white income. Like it does get closer and closer to 100%, like meaning that they're at parity over time, you know, like so. It
should, except they're nowhere near parity with us, right? What are they like? Well, I guess you're. How, I don't know how white you are. I guess I'm the whitest person here, so I shouldn't. Say
You're
that.
Obviously the whitest person
here. But yeah, I mean, it's still probably like 70%. It's still quite a bit. It's still quite a bit off.
It's 70 and 75 according to the chart.
It's 75.
Yeah.
Oh yeah, it's on the chart that I'm looking at.
That's many years. I mean, we're 2022. I'm guessing it's closer now, but.
No, I'm guessing it's worse. I'm guessing it's worse now. Actually,
no.
Yeah, no. I think it peaked in the Trump. I think it peaked in the Trump administration. Actually,
you think it's worse now than it was in 2018? Yes. Which is where this chart goes. It hasn't gone lower. So. Doubt it.
I feel like there's a lot of correlation.
It's not important.
Not necessarily causation, but yeah, it's tough to pinpoint, and nor does the graph like. You know, put a point on what causes this
and
flattening.
There's literally no conversation on the website to suggest causation. It's just literally showing chart after chart after chart after chart, which is pretty cool.
It's chart after chart after chart where there's like a massive deviation in exactly the year like 1971, which is obviously they're trying to call attention to something here.
Right.
So that's Bretton Woods 1.
Yes. So back to what we were talking about, this article. So he's talking about this new Bretton Woods, which is sort of like it's like a full circle regression back, right? Because the original Bretton Woods is the idea that, we're not going to have anything backing money. It's just worth something because we say so, and we're really powerful, so that's what's going to happen. And then we kind of came out of the petrodollar system and all that jazz, right? But what this Credit Suisse guy is saying in this note is that he's saying like that has now peaked, and like the sort of weaponization of the dollar in the Russia crisis is basically like the final nail in the coffin for that. And the dollar is never going to go back to what it was. Now there's going to be a move back the other direction towards commodity-backed currencies and multiple, currencies. Like, we may see a world where like the Chinese start saying that, the yuan it's backed by this like gigantic portfolio of gold and rare earth metals and all this stuff, right? Because that's kind of what Russia's doing now anyway, right? Like they're basically trying to hoard like real assets to kind of shelter from everything, right? They've been hoarding gold, they've been hoarding oil, they've been hoarding like all this stuff. It's this movement away from the dollar, right? And we may see other countries do the same, right? Like they've watched like what we will do, and I'm not saying what we did was wrong. It was almost certainly necessary. But it's going to be hard to undo that, right? We basically said that the dollar isn't this like open thing that anybody can use anymore. It's something that, we can take away from you, and there may be this move now to own things, to own currencies that can't be taken away from you. And that may extend to Bitcoin. I mean, he mentions Bitcoin at the very end of this article, right? Like if Bitcoin can kind of like escape regulation, which I think is like a big if at this point, but if it can, that's going to be like a really interesting asset in this sort of like new paradigm where we're issuing like fiat dollars again.
He leaves us with a cliffhanger at the end of the note, and he says, after this war is over, money in quotes will never be the same again, and Bitcoin, in parentheses, if it still exists then, will probably benefit from all this. But he doesn't mention Bitcoin throughout the rest of the letter. I'm trying to remember back, when you're talking about currencies that are backed by commodities or maybe a basket of currencies, I thought that's what Facebook's stable coin, or I guess current digital currency Libra, when it was first thought of, was going to be. It was going to be this stable coin, this digital currency that was backed by a basket of currencies, including the US dollar, but also euros, yen, sterling, Singapore dollar. And I wonder if it was going to include...
but not commodities, though, right? It was just supposed to be...
Correct.
I could be wrong on this, but I think it was just a basket of currencies.
You're right. It was just a basket of currencies. So maybe this isn't
familiar
a good example.
Yeah, do you remember John Maynard Keynes?
Yes.
Keynesian economics. In
high school.
He was the guy who proposed the Bancor, right? Which the protocol is actually named after, now that I think about it. But that was supposed to be this like that was like an alternative, I think, to the Bretton Woods thing. The idea that like we were going to have like this global reserve currency that was like actually backed by like this basket of like commodities, and that ended up just kind of falling by the wayside, and we chose paper money.
Well, I mean, what's the realization of his idea here? Is it a currency that's like backed by, say, gold and a basket of other commodities, if not only gold?
That's what gold bugs say the end game is, right? Like the whole bull case for all the gold bugs is that like eventually all of these fiats are going to not necessarily go to zero, but there's going to be this time where everybody gets together and they're like, we have to just re-rate everything. And to restore confidence, we're going to like partially back things by gold, and then gold goes through the moon, right? Like you cut all the values of the currency by half, you back them by gold, but then gold like 2x's, and then
I'm not sure I want that during my lifetime. That sounds painful. I don't know if I want that.
It feels like we're gonna get it or something. I don't know. What do you think, Eric? Have you thought about what future currency Armageddon looks like?
Kind of, but like I almost like frame it differently, and I think like my frame is like going back to your old mentor Stephen is Ray Dalio's framework. It's like it's like debt cycle related. You know, like we have so much debt, like national debt, consumer debt, like both on just like a notional level and as percentage of GDP. Like what we're gonna see soon is that like income is not catching up with expenses. Like oil, commodities, wheat, everything's going to get more expensive, and wages are not catching up with that. So people don't have enough money to sort of keep pace. What you're also going to see is, I guess, just like collateral, meaning like you would take those earnings, you would take those personal earnings or income and put them into assets, and you can use those assets as collateral to go borrow more. Like that collateral is going to disappear. Like we're gonna remove a lot of money from the system. And I think your boy Dalio described this as a deleveraging. And what this looks like to me, I don't know where it ends up. Maybe it is in like a new monetary regime. I don't think it is, but I just think we're just going to go through a lot of pain in the near term as we figure out what this looks like.
Haven't we seen this like problem and solution before in like the 70s and 80s when inflation was like over 10%? Paul Volcker, rest in peace, he was the Fed president during the 70s and 80s. I'm not sure exactly what the timeline was, but I think Carter and then Reagan was the president in that era. And we had, and again, I don't know the exact numbers, but I'm assuming inflation over 10%. It was really high. And he, the poor guy, his like byline on his obituary is, Paul Volcker, Fed chairman who waged war on inflation, is dead in 92. Like he was known for basically breaking the back of inflation. And his simple solution was jack up interest rates. And he jacked up interest rates like close to 14%. And
my dad
he was like
30-year interest rate.
I think it was above 40. Like I feel like short-term rates. Yeah, like I think T-bills at like 16 or 17%. Like if you could imagine that, like they're basically zero now. It was nuts, but like why that can't really happen today, right? Do you understand like what's different back then?
Well, for sure, our debt to GDP is significantly higher than it was then. But like his purpose was to deleverage and stop the government from borrowing so much because he thought it's so critical to the health of our economy. And maybe the relative change in that is from 0% to 4%, which sounds atrocious and super painful now, but it would certainly get politicians to think a lot differently about the debt. And, for as much as conservatives talk about being, fiscally responsible, no matter what party's in power, they spend more. And if interest rates were that high and they were facing, the ability of the US government to pay down its debt, maybe it would actually bring it to the focus of the conversation and to the national narrative. I'm not sure, but obviously that's the biggest difference. I think like it would be like a significant portion of the federal budget would be just the interest payments on the federal debt.
Yeah, I think
like what else do you have?
Like I think at 4%, like we're paying like somebody fact check me on this. I'm pulling this out of my ass, but I think at like. No, I think we're like close to like 100, like not 100, but like probably like 60 or 70%. I think of GDP is like going to interest service at this point. Like, isn't it already like 20 or 30%? It's already like 30% right now, and rates are like basically zero, right? Look that up, Jamie.
Yeah. So
look that up, Jamie.
Look that up. I mean, you're right. The difference is that the government would go broke if we raised interest rates that fast. But what happens?
We also weren't as leveraged back then, right? Like the system has so much leverage right now. Like the Fed is, I think, trying to do this thing where like everybody's playing a game of chicken with the Fed, where investors are like, we know you can't raise rates, and it has to be QE infinity forever, so we're just going to go ultra long all the risk. And then the Fed's trying to do this thing where they're like trying to demonstrate to markets that no, we can we can raise rates, we can do it. I'll do it. I'll fucking do it. I'll pull the trigger, right? And everybody seems to be pricing in, which is what makes me nervous. But the consensus now is that they're going to like do this fake out where they raise rates and pretend that they're going to tighten. But then the economy is going to basically contract really, really badly. And then they're going to sort of use that as an excuse just in time for the next election to take their foot off the brakes again and then redeploy liquidity in the system. And then we all, go up only again. But that's kind of consensus, I think, which means it's probably not going to happen exactly that way. A lot of people now are saying that like the war has basically served as its own tightening. Like people think that, the war has caused tightening, the gas prices going up, energy prices going up, people are spending less, inflation is going to come out of the system naturally. Maybe they're going to use this as an excuse to not cut, and maybe like we actually see like a at least temporary like risk on spike again, like after the next meeting. Like that's kind of like the bull case for crypto, at least short term. I don't know what that looks like 6 months from now. But yeah, it's I don't know. I don't know what's gonna happen. I don't think anybody knows what's gonna happen, right?
So I just looked it up. I just looked this up. Interest payments as a percentage of tax revenue, meaning like the income that the government generates, it's 15% in 2020, and that's when interest payments were zero. So that was already 15% of the tax revenue being paid out as interest alone. Imagine trying to hike the interest rate. What quickly happens to
you'd be at like 100%.
Very quickly,
like 100% of GDP going to pay interest. Like it's sort of like the definition of a Ponzi scheme, right? They're trying to like
of all time.
Juice the economy so that we generate more revenue and GDP growth, so that we can tax it, and then like use that like economic growth to kind of pay down the interest. And they're trying to just do this perpetually forever. And their plan is to sort of land the plane, like crash land the plane softly, right? Where they like, if they can, they think that they can carry this out for like 1 or 2 decades and slowly inflate away the debt, right? That's their idea of trying to find that Goldilocks. But like if history is any indication, they're just like never able to do that. There's like always.
So what's your solution, knowing like if you can like see the future, which I think the 4 of us are like seeing this thing play out in advance. Like how are you playing it today?
You have to own a variety of stuff, right? Like you have to. I think like real estate is great, right? Because it's like this like. Especially if it's real estate like along the coast or something where you can't make any more of it. Like no matter how much money they print, like if they keep printing, well, the value of your house just goes up because you just can't create more of that house. Like if you live in coastal San Diego, that's like it. That's just like nobody's going to make more of that house, right? So you're sort of protected in that way, right? But you also in an environment where they keep trying to drive rates lower, that helps you too, because the lower rates go, the higher home values go up, because people can like afford a larger and larger monthly payment. They borrow more, they lever more, and number go up, right? I also think that like energy stocks, energy stocks that generate like actual revenues, probably like good in this type of environment, especially like a stagflationary environment. I think it's known that you want to own like energy stocks, that sort of thing. Like growth, like tech stocks suck if you go stagflation. Stagflation is like the nightmare scenario, right? Stagflation is like when you have inflation, but there's also like no growth. Like at least before we had like super high inflation, but the economy was also on like a heater. So you can kind of get yourself out of it. Like stagflation is like a nightmare. Like gas goes to $7 and then like people aren't making more money. The economy is not really chugging along. And that's like kind of what we had in the 70s, right? That was a real nightmare scenario. And like what Volcker did at the time was like wildly unpopular in the moment. Like it caused like a lot of temporary pain. And I don't even think like politicians like have the balls to do what he did ever again. Like everybody is just like so self-serving. Like, what can I do to get elected tomorrow? What can I do? Like that's how everything runs, right? And when you play those incentives forward, it's hard to envision a scenario where we go the austerity route. It's just like everybody, I think, is going to want to just keep kicking the can.
It takes a guy who's willing to fall on his sword. Like who's going to be willing to do that for the betterment of our society?
There's a term I'm trying to understand better. Maybe we talk about it real quick. Like the phrase monetizing the debt or debt monetization. So people say like if interest rates got up to like 2-4%, the government wouldn't be able to pay the interest on its debt. And therefore we go into monetizing the debt. And as far as I understand it, what it means to me is that essentially we're borrowing money from the Federal Reserve, the central bank, to finance spending. But isn't that what we're doing already? Or is this definition specifically borrowing more money from the central bank in order to pay the interest on the debt that we already have? Because people have talked about monetizing the debt as like this really worst case scenario. But when I kind of read it and study up on it, it seems like it feels like we're already doing that already.
We're doing it right now. Like, isn't monetizing the debt the strategy via which you just sort of perpetually increase the money supply, and you basically try to hold real rates like at a level that's different than your borrow rate, such that like you're borrowing at a 0.5%, but the real rate is 2%, which means that every year you're inflating away your debt 1.5%. Right? That's that sort of like Goldilocks zone I was talking about, where they want to try to find a place where they can keep inflation at this like high, maybe like 3 or 4%, but manageable rate, where they can sort of aggressively monetize the debt by keeping rates low, inflation high. And if they think they can chunk down the debt by like 3 or 4% a year in real terms, and then do that for like the better part of a decade or two, then they think they can get back to this level where they can raise rates again. Right? The debt to GDP ratio is too high right now to do this aggressive like raise rates policy, right? They don't have the cushion, right? If your debt to GDP is like 10%, you've got all of this leeway to jack up rates to kind of, halt the economy and bring things under control, or halt inflation and bring things under control, right? But like we said earlier, when your debt to GDP is like 50%, well, you do 2, 3x, 4x rates. They're talking about like 9 rate hikes this year. Like, I don't think that's going to happen. That seems like insane to me. Like,
is the fuss around monetizing the debt essentially that you could end up in a spiral inflation scenario where you're printing money to pay off the interest and inflation runs out of control and the money is more worthless than it is today? Okay, so that's why there's so much like fuss about we could end up monetizing the debt. It seems like that we're doing that already. I think one interesting thing that exists now is, and you mentioned the political angle, is that Janet Yellen, the previous Fed president, is now the Treasury Secretary. So there's this kind of obviously direct line between the executive branch and the chairman of the Federal Reserve. So I wonder if there's a little more back and forth. I mean, I'm sure there's always been political pressure that's existed between the executive branch and the Federal Reserve, but maybe more so now. And something I brought up before we started recording was I'm really curious to see how the inflation print affects the politics coming up in the midterm. So we have midterm elections coming up in November, and now we have this kind of disgusting Ukraine Russia crisis going on. And we have like from a political angle, at least, a scapegoat for inflation. And I'm kind of just wondering, the Democrats going to use this to say, well, this is why we have inflation. And it's particularly, probably pretty prudent for them to do that, and somewhat relevant because when you look at the previous inflation prints, I think the number one and number two thing was energy, specifically like, oil prices and the cost of gasoline. It was also housing, your rent and housing prices, and then food was like the top 3 that people were feeling at home. And energy is going to be the breakout in the next inflation print for sure. And they're going to be able to point to this, war that started as the cause of that, when just 2 weeks ago, the main reason we were talking about this was monetary and fiscal policy. The Fed, being too slow to raise rates, and also fiscal policy to print more money and approve more spending bills when it wasn't necessary, I guess, at the point in which they approved the spending bill. So I feel like the Democrats are going to get somewhat of a free pass here, and they were already kind of talking about it, even a week before the invasion started, and they're certainly going to run with it now. Does that mean they're going to get the shellacking or not? I'm curious what you guys think. If and curious how you feel personally about it. Like, do you think?
Okay, so personally, I think you're right that is an out, but I don't like to label it as partisan because we've been running deficits in like the federal budget for multiple administrations on both sides. Like we've gotten ourselves into this position on, like, as a Democrat and a Republican president, whatever, like, to say that are the Dems going to get a free out by saying like this inflation is just because of war? It's like, I think that's like not very purple. I think, like, would anybody in power use this as a free out? I think absolutely you would say, of course, like, oh yeah, inflation's high because Russia, we can't import the oil anymore, even though energy, it only makes up 3% of the CPI index. So like it actually isn't the driver. It's just the fact that, like, we want to blame it on something else. Like, I just want to, like, reframe it to say that it's not like a Dems situation.
Well, also I'll point to one, the American Rescue Plan Act. Like, his first bill that he signed, I think, was that COVID rescue plan, when arguably he didn't need to do anything. He just had to let the economy, like, recover. And there wasn't really, I mean, we went from talking billions to hundreds of billions, and we were like throwing around trillions of dollars. I mean, Trump did the same thing, in the middle of the crisis, printed multiple trillions of dollars. I mean, that was a bipartisan action. So agreed there. But he also took this extra step once he took office to print another 2 trillion. And I think it included another stimulus payment, which I think at the time it came, all of us were like, and granted, we're in a little bubble on our own.
I think, like, what I'm seeing in this Ponzi, as Stephen accurately described it, is that, like, it's not a Dem or Republican thing. It's like the next guy is going to print more than the fucking next guy is going to print more than the next guy. And, like, that's the incentive at play. Maybe there's going to be some break in the chain where one guy doesn't, like, print more than the predecessor. But, like, that's like our incentive system is designed to work this way as it currently stands. So, like, I don't think it's necessarily like a partisan issue.
Yeah, I think that's a good point. Like, I don't think there's, like, left and right on spending anymore. Like, everybody spends. Trump spent like an animal. Obama spent like crazy. Bush spent like crazy. Like, the last guy who didn't spend was, like, Clinton, right? Like, and he was Dem. But, like, now everybody spends, and everybody's going to continue to spend. And that's because, like, it's not so much like a left-right thing anymore. It's that, like, populism has really taken hold in both parties. Like, Trump was a populist thing, and, like, the heart and soul of the Democrat Party, which is not Biden, is populist. I think the next election is going to be, like, extremely populist in nature. There's no populist who's going to take office and then, like, implement austerity measures, right? It's just like, it's just not going to happen. So the spending thing is sort of like a thing, I think, that you can just bet the farm on no matter who wins, right? Eric, you're exactly right that, like, if there was a Republican in the House right now, like, they'd obviously be blaming Russia for the inflation. Like, of course that would be happening. Are the American people going to buy it? No. Like, I think Biden's, like, I don't know. I'm curious what you guys think, but, like, I don't think there's ever been a president, like, including Carter, who is in, like, a more of a position to get completely shellacked in the midterms than Biden right now. I mean, this is just, like, objectively speaking, like, the worst, like, one of the worst presidencies that's ever existed for the first, like, year or two. And it's not just, like, the fact that all this shit has gone wrong. It's that, like, so much of it was, like, a self-inflicted gunshot wound to the head that didn't need to be there. And he somehow managed to just fail everybody. Even the people in his own party aren't happy with him. Like, everybody on the left was, like, very pissed off at Biden. Independents are pissed off at Biden. Conservatives are pissed off at Biden. The only people who like Biden is this, like, weird kind of boomer moderate subset of, like, the Democratic base who just is like, I don't even know what world they live in, right? But like he's like sub 30 approval rating now. It's like unbelievable. And that was like pre-war breaking out and pre-$7 gas. Like he's just his ratings, they're just going to zero. They're gonna get like shitcoin chart, just straight to zero.
It's funny you compared him to Carter, because as you were talking about comparing him to Carter, I was looking up Carter, and then I was like, but who came after Carter? Reagan. And Reagan was known for cutting discretionary spending. So I started Googling this while you were talking about that. And he did cut domestic discretionary spending. He also cut taxes and increased military spending, which contributed to a tripling of the federal debt. So, you might get like someone opposite in place. And to Eric's point, the guy who came in and was known for, cutting domestic discretionary spending. By the way, you should go look back at some of Reagan's debates. There's some clips on YouTube. And the guy was so specific and numbers focused in some of the things where the government was spending his money. It was one of the only presidential debates or speeches I've seen where a president is actually citing numbers in the budget and like, get rid of that, don't need that. And actually talking about the effectiveness of some of the programs and how much we spent per, productive dollar in the program. But anyway, so to your point, even Reagan tripled federal
That brings
debt.
up a good point, because actually, like, if I'm looking at the macroeconomic situation, what I actually feel like is going to happen is we're going to have like this massive pain point where like all risk assets bleed out. But then I think we're going to have like this euphoric bull run again as like the Fed lowers rates to zero because they have to, and it gets to be like party on again.
You might be right.
Things can happen, right?
What if no one cares that we're going to monetize the debt? Let's say, like Eric in the Discord, you mentioned this kind of reminds me of the 2018 taper tantrum when the Federal Reserve started to taper quantitative easing, started bumping up interest rates. Market freaked out. Fed cooled down off raising interest rates, eventually decreased them again. And what if we go to this modern monetary theory that like people, I hope we don't, but let's just say that, general populace says, well, I think we've proven that the government can just print more money and it's okay. And we go back risk on. And it's like this scary thing of like, I don't know, playing chicken with inflation and the currency. Like you got to rush to continue to own assets. And if you're not owning assets, if you're earning hourly, not owning assets,
is it
sounds like a
fair
disaster
to say that this is sort of like the bargain right now that's being thrown out, like with the policy, all this stuff that's being proposed and how everything's being run? It's sort of like, seems to me like people are saying, hey, we're gonna print more money. I'm doing my Biden impression now. God, I should not do that. $4 trillion. No, they're gonna just like keep printing money, and they're gonna say to all the people who own stuff, right? You're gonna get really rich. And we know that this is going to like fuck over all the middle class and poor people because we're just going to inflate them away. So what we're going to ask you to do is let us do like wealth taxes and all this stuff where we get you rich, but then we claw back that money and then we kind of like UBI it back to people. And in doing that, we're going to find this magic Goldilocks thing where we make everybody rich, but then we take their money and then the government like funnels it all back to the people who they like inflated away all their stuff, and then everybody's happy. Like you get to keep a little money in your stock portfolio, and all the peasants get to like buy bread, right? It seems like that's like kind of the gist of what's being proposed, and it does seem a little messed up. Like there should be like a better way to run the system, as opposed to like you have this like horrible, like it's just like totally off kilter, and you're like, okay, like yeah, I know this is totally fucked up. We're gonna do it, and we're gonna just like wildly make you rich. And we're gonna take your money and we're gonna put it over here, and then somehow in the end, everybody ends up feeling good. Is it fair to say that that's like kind of what's happening?
Yeah,
I think that's it. I think that's right.
Yeah.
So the Fed is backward looking, right? They're looking at data as it comes in, and then they're like defining policy based on that data that is historic. So like inflation data that they get, they're going to like make policy decisions based on that. What they want to do is make sure that inflation is going down. It'll go down because we're going to a recession, I'm pretty sure. So like inflation is going to go down just on the fact that like people aren't going to have any money to spend and prices are going to go lower. Okay. I think like everything's going to go lower. We're going into recession. So the Fed is going to go back to who they have been their entire history, which is like this stimulative type of Fed. They want to like bolster growth. That's what we're going to go back to. So I'm bullish on growth, sort of like extending beyond, like this bear market. Man, I do think that what I tell people that are like outside of our crypto sphere, right? So like we're in this like ETH, Bitcoin type thing. Like not everyone's in this thing. What I tell people who are like old school, that are like, hey, we want to own the S&P 500. I want to own real estate. It's like the thing that I say over and over again is like, it doesn't matter. It doesn't matter what you own. Just own assets. For God's sake, just own assets and you're going to fucking make it, because that's all that matters. Like everything is going to win as long as you own assets. It's going to win to different levels, but assets are going to win.
Amen.
Yeah. Amen. And like you said, like owning assets is great. Owning scarce assets is even better. That's why like commodities are going through the roof right now, because they're physical things people need and we can't make more of them in the short run, right? A little more complicated, right? Because when you're talking about commodities, you've got futures contracts, and the price of oil this month is way more expensive than the price of oil a year from now. Because when you talk about commodities, like you have this thing where like the market can produce more of them when the price goes up. And that's like why the beachfront real estate is really interesting, because the market can't produce more of it, at least not in California, right? You could argue there's beachfront real estate elsewhere in the world, so it's not like a super scarce asset, but it's pretty damn scarce. But that's probably also a good pitch for Bitcoin to your people, right? Like Bitcoin is like it's like digital beachfront real estate. It's this thing that you literally cannot produce more of, like mathematically. It's just mathematically encoded scarcity. There can't be any more of it. But also it's like highly liquid. It's infinitely transferable. You can shelter wealth in it. You can take it anywhere you want in your head. It's got all these other interesting properties. So in that type of world, it's probably going to do good.
Right, but it takes belief, because the price action does not reflect that narrative at all. Like you would look at beachfront real estate. Run, yeah. You'd look at beachfront real estate exactly, and that's fucking skyrocketing. And you look at other scarce assets skyrocketing. You look at Bitcoin, it's fucking down in the dumps. It's where you're like,
lows. To piggyback off that, like what are people scared about now? Scared to touch right now? Because I believe March might be the 2-year anniversary of when you actually would get paid to take a barrel of oil. The cost of oil went negative briefly for like a week, because there was so much oil. Yeah. No one was consuming it because everyone was at home. This is a 2-year anniversary. No one was consuming oil. No one was driving. No one was flying. We had production at like a peak, specifically in the US. And people who owned oil futures and oil contracts were paying people to buy it off them. So the question,
literally, because storage costs exceeded the delivery. Exactly.
I think at the time I was like joking around that like there was some hedge fund trader who made a trade and was like, oh my God, we can't fit, a container full or a ship container full of oil barrels in our hedge fund office. I need to pay, just get this off. Because that might've been a reality at some point. So what are people scared to touch now? That's included in your viewpoint, Eric, of like, it's an asset, but what are people scared to touch?
I don't have an answer
Facebook?
For that exact question, but what I do have is like a perspective on oil itself, which I think is important. So like the highest price that oil has ever been in our lifetime, maybe ever, is $147 per barrel. And that was in 2008. Okay. So we're under that today, but the money supply has increased substantially since 2008. So like oil is priced in dollar terms and dollars have devalued. So what does that equal today? It's actually kind of close to like $250 a barrel on today's dollar value. So like we're feeling the pain now at the pump, and like, you know, we're going to feel it worse if it goes to 150 or 175. Like, but imagine it goes to $250 a barrel. Imagine your price at the pump goes to $10 a gallon or something. Like, you're not going to do the same things you used to do. We're like, I'm so certain we're going into a recession, and that the Fed is going to tighten based on that, and it's going to get so ugly in risk assets. I basically don't have any other point outside of
that reminds me. Can we talk about how terrible like the Western world's energy policy is?
Yeah, so
Yes.
I had a question. I was like speaking about you know, Biden's news as well of, you know, officially banning Russian energy and oil, and this idea of like where oil is at. Do you guys know much in general about nuclear energy? Has anyone done a deep dive on it, and has your opinion changed on it over the last few years? Because the people that I really admire and trust seem to have changed their opinion on it. I'm curious if you guys have dove into this, because we have to figure this out. Like,
I've been a nuclear
Western
bull
world
for a long time, so I don't know if you're going to get a changed perspective from me. I think I hated nuclear in my like 19-year-old like socialist phase or something. But
yeah, same. When we all had that phase, but like in general, the like consensus and the gist of what I've gathered over the last few years is like a lot of the issues are overblown and exaggerated.
So I want Nick to give sort of the long-winded answer, because my answer is just about the stocks that can benefit if nuclear gets more widely adopted, because I've actually been asking myself the same question, and I have that answer, but that's pretty much all I have.
No, give it.
You
give
go,
the stocks.
You go first.
No,
give the
I don't have a
alfalfa.
long.
Give the
I want to
alfalfa
know.
first.
I want to know too.
Okay, so there's basically only two plays in this realm. One is ticker symbol CCJ. It's a Canadian based business that mines uranium but also sells nuclear reactors. And then every other play is like you can't touch it. It's like Kazakhstan based, like CCJ is the one. So maybe way out of the money options go long.
Ooh, I like that. That sounds like a fun bet. I
hasn't
down
uranium not moved a lot actually? Like didn't nickel like double? Wait, is it back up again? Is it up?
Nickel like 1,000.
Nickel's up like 130% like one day instantly. But when I checked uranium, it was only up like 5% or something. I don't know if that's changed now, but the market doesn't seem to think that we're gonna build nuclear plants anytime soon.
The one area we did talk about a little bit in the office about nuclear was taking a look at what it takes to invest in nuclear. And it looks like the timeline for a build out of a nuclear plant is something like 20 to 30 years. So we're talking about decades. And when you think about investors in the private market, like think about yourselves investing in a nuclear plant. Like what investor wants to wait 30 years before they see any type of return with ambiguity of what the regulatory market will look like in 20 to 30 years, let alone 10 years. So this is one area where I think the private market has a tough time solving this solution. It might, or this problem, and it might take like a coordinated government effort to maybe subsidize or at least plan like a directive where we have subsidies so we can attract private investment into these things in order to get them built out. The second thing is that maybe there's a technological advancement that has been made in the construction of nuclear plants where they don't take 20 to 30 years. And that would be exciting because then you would see the payoff maybe shorten. And that would be interesting. There's also the kind of like a local politics play, is that everyone wants cheap to free nuclear energy, but no one wants a nuclear plant in their backyard. Like, what is a nuclear plant going to do to your home values if you got one in the backyard? And we have one here in Southern California. I don't think it's active anymore. But that's something to play as well. Like if you're going to have a kind of coordinated federal effort to build nuclear plants, how do you choose where these things go? And do you maybe subsidize people who live there in some fashion? How do you give them tax credits? Like, I believe if you live in Saudi Arabia, you don't pay taxes. You live off the fruits of the land. And so maybe there's something similar where if you live in some kind of vicinity of a nuclear plant, you're going to have some issues there. So I think nuclear is obviously getting a lot more play. And towards Stephen's question originally, Germany, for one, has gone down this path of turning off their nuclear reactors and has made a big shift into sustainable energy without realizing that, they got their balls in a vice by Russia in terms of where their energy comes from. And we sent a video in our thread. It was a Donald Trump United Nations address. And while a lot of what he says, the style of which we don't agree with, he did make one point that, Germany, it's not smart for you to have all of your energy being produced by Russia. And if you guys want to look up the clip, there's actually a video of it. The Russian delegation, there's like 5 or 6 diplomats in the crowd while Trump's speaking, and they literally just start busting up laughing at him as a joke. Like, you don't know what
I thought the Germans were laughing at him.
Oh, is that what? That's what I meant. Sorry, the German delegation started laughing at Trump at his comment.
Discord, actually.
Not aging well.
Yeah, not aging well at all, specifically this week. So anyway, that's what I've kind of researched so far in nuclear. That's all I got thus far. I don't.
Yeah, I mean, nuclear is it's like the essence of a public good, right? Like, we all think government has a useful function in delivering public goods. Like, I don't have a problem with government building nuclear plants. It seems useful. I think the larger issue at play here is like this seems like a teachable moment. I think because people are. I think everybody here agrees that like 30 years, 40 years from now, like we want to be like running the whole world on renewables, right? We don't want to be burning fossil fuels. There's nothing like good about that in the long run, right? But I think very often people like just don't understand like this like nuance of like, okay, like we want to be there, but that doesn't mean you can just flip a switch and like the whole world just turns renewable like tomorrow, right? Like, I think like, Greta was like yelling at everybody for years, and just how daring you. And like, we just like, of course we should go to solar. We should go to wind. Of course we should like deploy all these technologies. That doesn't mean in the short run that our demand for like oil just like goes off like a switch, right? Like you saw this with like Keystone, right? We shut down that pipeline, and environmentalists like for like, oh, that's like a victory, like we're not gonna like harm the environment and use more oil. But like the reality of the situation is like the demand for oil didn't change, right? So we're still buying the oil. Well, now it's just coming from somewhere else, and it turns out like, well, we're buying a lot of it from Russia. And does Russia care about the environment? Do they produce oil in some sort of like sustainable way? No, like of course not. They don't give a shit, right? So I think we have to be better at like kind of towing this line where like, yes, we want to go here, but we also have to understand like the trade-offs of going there too quickly. We have to have like better off-ramps for ourselves. We can't get into situations like this where like there's this like dictator that has the entire Western world like by the balls, right? We've been afraid to issue sanctions because we don't want people's gas price going up too much. But that's just like silly. Why is everybody dependent on Russia for freaking gas? It doesn't make any sense. Like we get out over our skis a little bit. I think the environmentalists went like a little bit too far in this instance. Europe especially, like they killed too much. Like Europe, look, obviously the proof is in the pudding with prices, right? Like in today's day and age, like Europe cannot produce enough energy from renewable sources to be self-sustaining and to not rely on Russian gas and oil. And now we're kind of like seeing like the result of that. Like there are these kind of like second and third order consequences besides like, oh my God, we're burning carbon. And yes, we don't want to do that, but we also don't want an evil dictator running rampant, like kind of taking over vast swaths of Europe and bombing like innocent women and children, right? Like these things are complicated, and people I think need to take a step back before they kind of like oversimplify stuff. And it's just like, all fossil fuels bad, get rid of them all tomorrow, world better place. Like, not. I mean, not quite.
To your point, I think Elon Musk had a tweet recently, like maybe 4 or 5 days ago, where he basically said, like, hate to say it, but like, we need to increase oil and gas output immediately. Like, Elon Musk, whose goal in life is creating a sustainable planet, and his ventures with Tesla are all about moving away from carbon output, is saying that extreme times demand extraordinary measures and that we need to increase it. The problem is that you can't just turn back oil production online. I think on CNBC today, the Occidental Petroleum CEO, I forget her name, but she was basically saying we can't just increase oil production to meet the demand. Like, we have labor shortages, we have raw material shortages in our own business, and we can't just turn it back on to our pre-pandemic peak. So there is this kind of lagging effect that we're feeling now, and like you said, it's proof is in the pudding of the price. I think Elon Musk also was tweeting about nuclear, Armand, in this case. Hopefully, I found it. Hopefully, it's now extremely obvious that Europe should restart dormant nuclear power stations and increase power output out of existing ones. This is critical to national and international security.
Yeah. Yeah, I've been wondering how much of our, nuclear is dormant as well, and like how long, if it takes 20, 30 years to produce one from scratch, and the infrastructure required, what it takes to bring back to life a dormant one. But back to this oil question and Biden and the decision he made, and to Stephen's point about people and all of us politicians oversimplifying this reactive approach to, well, yeah, we want sustainable, so that's what we got to do. So we immediately need to move away from this stuff. And when we're overly reactive like that, now we're in this situation, as you described it, and all of a sudden, we're left with the decision of like, so do we go to Venezuela, Iran to get our oil now?
Iran.
Like, I mean, that's, it's just, you're playing the same game all over again, dude.
Look
Like,
what we're doing in the background now. Like, while we are fighting Russia, or like supporting a fight against Russia, we are simultaneously right now negotiating with Iran and like leveraging Russia to like help us in the negotiations, because we need the oil. It's like so wild and like totally fucked, right? Like, how can these two things be? How can this be happening at the same time? Like, it's like people look at this and they're just like, the whole world.
That shows the lack of leverage and honestly, like, truly understanding the game we're playing. Shows you that you don't know your allies or your enemies. You really it's all
this
foggy.
Time makes me think about George W. Bush and Dick Cheney. They kind of always talked about oil and national security together, and maybe in a post-mortem kind of use that as a reason for invading Iraq. And I'm wondering, like, was that part of the decision to invade Iraq? Obviously it wasn't weapons of mass destruction. Was it one, cleaning up his dad's unfinished business, George H.W. Bush business? Was it, or was this like long-term plan to secure oil for the country, and that was the reason? What was their vision? That we would kind of oversee production in Iraq of oil and secure some kind of a national security interest with it? I don't know. It's crossed my mind over the last week, now that oil and national security is obviously top of minds, and people are relating the two now, where I don't think that's been much of the discussion in the last 10 years or so, because it hasn't been this much of a pressing need.
I mean, can we look at what like a no-win situation this is for Biden? This is like the essence of politics, right? Because going into it, like a week ago, all the Republicans were like, or maybe like 3 days ago, all the Republicans were like, I can't believe you're not sanctioning oil. You're letting him do all this. You're not even cutting off their thing. But now he does it, and now it's just going to be a pivot to, oh my God, look how high gas prices are. I can't believe, it's just so disheartening to watch, because it's such like it's such a charade, and it's like really hard to parse out what the heck like the signal is from the noise in all of this, right? It's like all of the stuff we see on politics and all the stuff like the media is feeding us, like so much of it is just like, it's just like smoke and mirrors. Like I understand why people just like throw their hands up and they're like, meh.
It's so confusing because you look at the crypto markets, and guys, while we've been recording, Bitcoin has had like an 8% pump while we've been recording.
Oh shit! Jesus!
What happened? It's so funny. Like you get this, looming executive order from Biden about the review of cryptocurrencies, and speaking of noise and signal, Bitcoin just pumps 8% when we just started talking about a looming cryptocurrency executive order to review regulations in every single government agency.
It's almost like news doesn't really matter. It's almost like it's all just a meme and it's all noise, which it is for the most part with most news. Yeah,
should we talk a little bit about this
little pump there?
This like looming executive order. It
so
kind of seems
executive order is just like an order to look into it, right?
Yeah, like me as president, I order SEC, the Secretary of State, CFTC, all the government agencies. I need you to look into this and figure out where we should sit. It's not like I will say it's got some leading questions in it. It's not like please find where the opportunities lie in cryptocurrency and how we can use it to like gain a competitive advantage in the global economy. It's please find out whether for the State Department to find out if countries can use this for illicit means in avoiding sanctions. Please find out if this can be used for money laundering and other illicit actions. There is a little something about the Federal Reserve should decide if central bank digital currencies are a good idea. So it seems somewhat neutral, but with some leading questions. And Eric made the point earlier that like, well, hell, at least they're, asking some questions and kind of going down this path rather than enacting some ignorant regulation.
Yeah, man. Well, we'll see what comes about. But God, I'm so excited. Just that like they're doing some due diligence here. Can you guys like please just agree with me? It's like it's unbelievable that like we've gotten to a place in crypto where it's like they'll actually like bend an ear. They'll literally just like listen first rather than just like smacking you first. And like that alone is already such a big win. And to me, it's like, oh man, it just feels so good. It feels so good that like now they're even taking it seriously.
What if this is just the slow moving cogs of government and it's actually not just listening, it's just what government does before they enact legislation, move super slow, produce a ton of reports, and then, they just do whatever's politically relevant and advantageous at the time when it comes to making a decision. But yeah, I think we can be hopeful that it's somewhat listening and not stalling on the issue. Yeah, probably going to wait to see what cryptocurrency has on the midterms if people actually vote based on it. There's a few candidates I think running on like a crypto only platform, and they're probably going to wait and see what people do. So get your pitchforks and voting registrations ready, I guess. Armand, what were you going to say? I cut you off.
No, I mean I understand where Eric is coming from. I get it. Like it is promising in the sense that it wasn't just a smack and it wasn't just a straight move toward regulation, but I also completely understand what Nick is saying. I think you described what the political machine looks like way too well. It's unfortunate. Like that's the honest answer, but like that's also what the cynic in me believes about politics as a whole, that it's like, okay, let's just like get the information. We can't move because we're the government. It takes so much manpower to produce the most simple thing that like in the private enterprise world would just be like done in 1 week. And then with that information, we'll like basically use it to our advantage or as a chip against somebody else when the time comes, which is really sad and unfortunate. But what I hope, to Eric's point, is that it didn't come off to me like there was a listening ear. It came off to me like there was at least a desire for like a pursuit to find the information. What I hope for is that they pursue that with integrity and objectivity rather than like a predetermined notion of like what we want to find. That was what concerned me about what I read. It was like, okay, you're telling us what you want to go find and what your report is gonna address, but what lens are you gonna approach that with? Like a scientist or a politician? And unfortunately, we kind of know what politicians do. They don't approach things like science. Right. So, fingers crossed, and ultimately, yeah. I mean, I you alluded to this as well, Nick. It's like there was the mention of like, hey, let's look at like what Russia's doing, what China's doing with their central bank digital currency, and I think I mentioned this either separately or on the last podcast, but like I listened to Pomp's recent 8-minute episode, which I recommend people check out. I'll drop it in the Discord, going through the dangers of a central bank digital currency and how it can be used against its citizens and how dangerous it is and the slippery slope involved and how quickly things can escalate toward a situation like the one we have in China, and how what you buy and what you have access to and who you have access to can be controlled by the ultimate centralized entity, the government. So it's like the equivalent of buying a Bitcoin on Coinbase and having it shut down, but worse because like it's like you know we're going to control how you use it. You can use it toward this. I mean, the example Pomp made was really funny. He was like, if the government decides that being fat is a bad thing or being skinny is a bad thing, they'll be like, okay, we're going to limit you from buying these foods. Sounds ridiculous, but I mean, we're seeing it play out in many ways in these places that have that level of control. And we've talked about this on the podcast many times. Control is a one-way road. Power is a one-way road. You don't accumulate power and control in order to be like, okay, I feel like we have enough now. Things are under control. We're going to give you these rights back. So we have to be very careful with these issues.
Just as an example to your point, I believe the nominee for I forget the term, the vice chairman of the Federal Reserve, she had some pretty hot takes about when it comes to quantitative easing and using monetary policy to punish or I guess exclude oil companies from some of these like monetary actions. And so when the government has the opportunity to take control and point at, monetary policy, which should be neutral, they will take the opportunity. And we see this with, Biden nominating a vice chairman nominee who is explicitly said, like, we don't want to support the oil industry. And so that should be part of a monetary policy. So, that's just one inkling of what we might see when, there's a central bank digital currency and what control they may, exert over it. I think we really missed the boat when Facebook's like Libra was a project. I kind of liked it. It had this like backing of like 30 other companies that were involved in the payments value chain. They were going to partially back it by a basket of currencies. We had a great distribution model and Facebook and its apps, and PayPal was a part of that. We had this kind of group of companies that was willing to distribute it through its applications, to seed it within, the US and also, any user of the app. So this could have been people in South America and Europe and Asia. And we would have potentially had this almost like self-regulating body that is beholden to the market. And so to me, that was like a really good opportunity for us to take a mostly US dollar denominated stablecoin, mostly managed and regulated by American companies, but with this like viral distribution channel of the most popular apps in the world. And you see China kind of doing this with WeChat. They will distribute the digital yuan through WeChat, and they're doing it already. And so I feel like we kind of missed the boat. And it wouldn't have been a central bank digital currency, but to me, it would have been the happiest medium to have, at least something that was beholden to the market, where government, controlled currency is not necessarily beholden to the market. So I'm kind of bummed to see that project get scrapped multiple times.
Oh, I'm so happy it died. I think it would have been really sad if like everybody just onboarded to the realm of like crypto stablecoins, but they did it in this like kind of like Silicon Valley like VC Facebook kind of that was like everybody's thing. I don't know. It
also,
seems
Facebook's
like
lame.
Yeah, I mean the stock price would agree with you.
I mean, I guess from the U.S. government's strategic position, I feel like that would have been the right way. But
but why is I don't know,
the individual maybe not.
Convince me, like, why is Facebook better than USDC? Like, why can't we just distribute USDC through anybody can distribute USDC through apps? Like, all the rails are there, right, to integrate.
Well, because they had a financial incentive to do so, and it would have had a better distribution channel. Like if Facebook would have been the lead on a stable coin, we would have seen a US denominated stable coin, spread further than what USDC has. And USDC is great. It's the most popular, along with Tether, but like, I don't think it's seen the distribution that it could have if it had, applications as partners. And I don't think those applications are doing it because they don't have a financial incentive to do so. So, my worry is that, like I've always expressed this, that the digital yuan will have like, will spread a little faster into parts of the world where the USDC won't, or Tether won't.
Yeah, I know you think that. You still haven't convinced me of that though. I just feel like stable coins, of which like almost all of them are US dollar based, are they're like they already have like a huge foothold in almost the entire world, and the digital yuan doesn't. And I'm just failing to see why somebody in like Argentina is going to switch over to the digital yuan when they have like Tether on their Binance account and it works like really, really well, and they don't have to trust China, I guess. I mean, I hope I'm right. Because if you're right,
I hope you are too.
It's a scary path for the world.
I guess, I think China is kind of like, first off, a little caught off guard about how, aggressive Russia got. I don't know if they're aware that they were going to invade, but they certainly got caught off guard. And they've been even more caught off guard by how much Russia has united, the EU, NATO, even you lump in Japan in there, who's their neighbor, into kind of like isolating Russia economically to extreme lengths we've never seen before. But at the same time, Russia's only backing right now is China. And as far as having like a client state in what China is trying to do is some form of economic imperialism, what they're doing with the Belt and Road Initiative. But I think Russia presents another progression along that same objective where, there may be Russian debt that's denominated in yuan. And when you see the ruble crashing, it seems like an opportunity for China to denominate their debt in the yuan and kind of seed a currency in a country that is seeing their currency collapse. And so, and like, not only that, but like Russia as a client state is great because it borders China. So you kind of like take away a lot of, physical border disputes, but it's a large landmass with a capable army that has a ton of raw materials and energy. So I think like while they are probably cautious that they're seeing too much with allying Russia right now, they want to keep their relations with the U.S. Strong, and they want to improve them regardless of what you hear about China versus U.S. I think they're kind of looking at this as an opportunistic play and kind of the economic imperialism route. But that may not convince you now, but by episode 50, you'll be mine.
All right, I'll think on it. a little more.
All
right.
What else we got?
I think that was a good dense.
Yeah.
I think even I'm economic politiced out. You get anything, Armand? You probably got something a little more spiritual on your mind, right?
Yeah, but
Take us home.
Just so not at all what we've been talking about. It's just a weird pivot.
It's okay. Just
you teased us. You teased us at the beginning.
I don't know how we can fit this into the podcast. If we talk so much money and politics, it's like weird to pivot to like general life stuff. And there's like 4 people listening at this point anyway. I don't know. I feel like who made it this far? Like,
hey, kudos to everybody who just listened to that whole.
Yeah. Give him a promo code. Give him a promo code to join the VIP chat or something.
Give us a palate cleanser. Give the people what they want.
We should do an hour 3 POAP.
Take a left turn.
Every time we enter the 3rd hour, you get a POAP for listening.
Well, I think the timestamps help, like, because then if we will definitely keep doing the timestamps, because it's like, especially if our conversation lengths increase, like you can jump around from topic to topic. So we should also assume that maybe somebody just went, oh yeah, I'm gonna skip the China thing and move here. So what's been on my mind beyond all of this, all of this has been on my mind, and that's why I love talking about this stuff and learning every day. Even just this situation with digital currencies, central bank digital currencies, fascinating and so confusing. But what that ties into is this abundance of information, and there's just so much of it. I was reflecting recently on like just the way I grew up, the way we all grew up. We're all about the same age, and we grew up in this kind of like a Goldilocks zone as well, where it was like we lived in an analog world for quite a while, being millennials, being mid-30s, and we had the internet by middle school, dial-up, AOL. We all remember the sound, and that sound like truly changed our lives forever. Every single thing that we all talked about today is possible because of that sound, is possible because of that connection to the internet. The internet is the collective mind, the shared mind power of everything that has ever existed that we could possibly transcribe and in the Web 1 world publish and print and put into a digital format. And then we've just been building upon that for the last 30 years. And we now have Wikipedia and Google. And Google, it's like funny, like, our parents and people of that generation refer to like Google as God. Like to them, the idea of such a thing was like, it's impossible. It's impossible. It's an impossible technology to think like, I think like my dad, he always like makes the joke of like the things that you can pull out by pushing a button on your phone and asking something called Siri or Alexa. Alexa's even more trippy, right? Because it's like, oh my God, yesterday in the shower, I have an Alexa in my bathroom, and I asked Alexa a question while I was showering. It was some calculation or measurement or something, and then I went and I did another stat, and the next thing I knew, I was like 3 questions in with Alexa. I'm having a conversation with a fucking AI while I take a shower. What in the fuck? And
Alexa,
I can't disconnect, right? Actually,
Alexa, what's the BTC ratio?
Yeah, it was some bullshit like that. And one of my favorite, like, future.
You got some weird kinks, brother.
Hey, man, no kink shaming. No kink shaming. One of my favorite techno-futuristic movies is Her. I think you guys have all seen that, with Joaquin Phoenix falls in love with the AI. So I haven't fallen in love yet, but all of this to illustrate the level of connectivity and abundance of information. And I find that not only is it so incredibly imperative to be aware 24/7 of what you focus on and what you allow into your mind. Like that is like the foundational thing that I think I lost that for a while. And especially over the last couple of weeks, month, honestly, I would say the last 2 years really is where a lot of this started. You know, you have COVID and the confusion that comes with COVID, all the data being disputed, masks being disputed, reality being disputed. You know, Stephen and I talked about this in the thread. Another thing that comes with technology and the internet. We talked about, like, what can we even trust anymore? We're not even going to be able to trust footage anymore. We're not going to be able to trust reality anymore. Like, we'll see a video and it could be a complete fake of somebody famous or our president or another president of another country saying something. Maybe one we wake up to tomorrow, you know, Putin threatening nuclear, like I got my finger on the trigger. Could be a fake video. So what we put our attention to is more critical than ever before. And I found myself feeling more nervous. I tend to be a very like you know, just in terms of like when you look at like the big five model, like my neuroticism is low, luckily, like very low. I think it's like 6%. You know, that means that 94% of people are more neurotic than me, which I was actually surprised by. But still, I've noticed it go up. So I can only imagine what that feels like when you're overly anxious all the time, or you're neurotic and you might worry or think into things. And I noticed it go up and up and up. Started to become more cynical over these last couple of years. Started to become a little bit more fearful, and even at times a little more negative. So I had this like moment the other day where I reached out to my friend Jason Silva, who I think of as like one of the most positive, optimistic people out there, who also deals with his own stuff. But like for people that don't know Jason Silva, Jason is basically like a modern day philosopher and poet. And, you know, he was the host of Brain Games on Nat Geo and Origins on Nat Geo, but he's most well known for his YouTube videos. And he just does these shots of awe, these philosophical rants of pure poetry. And his whole life is about finding flow and focusing on the beauty and the awe of the world. So I reached out to him and I kind of just like told him how I was feeling, and we were going back and forth, and he sent me this like amazing long voice memo. And where it landed, like where we both landed, was like, information diet is everything. It is the most important thing in life. What you focus on creates your reality. You don't have to know everything. You should not click on everything. And you should be very diligent and conscientious about, not conscientious, but conscious of what you focus on. And it kind of, I needed that. I was like, so thank you, Jason. Like, shout out to Jason. Like, thank you. It was the conversation I needed to have, and a reminder of like how much beauty there still is in the world, how much good there still is in the world, regardless of like the macro right now, because the macro sucks. The macro objectively sucks right now. So I don't know how you guys have been feeling with that stuff, but I am really taking this information diet thing more seriously than I ever have, because it can really affect you and fuck you up. And then it changes you, it changes your personality, it changes your behavior, it changes your actions, it changes how much risk you take, it changes the ventures you step into, it changes everything.
I love it. I want to know what the two guys here on our left side panel here, the two ecom dudes, former ecom dude. Like, does it affect you that you guys used to play in like the fucking ad space? Like, does it affect you that you like used to play in like the click world? Because like, you know, as just like a participant, I don't even know all the tricks and whatever, but like, I'm very like cognizant of like what I click on the internet and stuff, but like how do you guys even play it when this is like your game, like this is your whole life, like your profession?
I think everything on the internet is nonsense for the most part. Like that's like the first rule, right? Once you've like produced a lot of content for search, and then you've made a lot of ads, and you've kind of seen how the sausage is made, you just kind of realize like, oh wow, like a lot of this is just not really good for me, and it comes from a place of like economic incentive as opposed to incentivizing truth or anything that would be sort of beneficial on like a higher spiritual level. And I think everybody should be like way more skeptical of everything they see online. It's all just like a giant system that's trying to shape you to believe something, think something, do something in one particular way. And like oftentimes like people are doing this and they don't even realize that they're just sort of like a part of like a larger system that's doing that. Like they can't see like enough levels up in the matrix to realize that. It's a lot of noise. We talk about signal and noise, and it's a lot of noise out there online. You should always like double check your biases. Like, wait, why do I actually think this? Is that really real? Like, is that, actively seek out alternatives, alternative viewpoints, alternative ideas, like anything you see on Twitter. Like, I don't know, read the comments. Comments are good because it's a good place to have people call out bullshit. It saves you a lot of time. There's often a guy first tweet, the first comment's like, oh, that's like actually fake footage from a video game. Here's the thing on YouTube. And you're like, oh, all right. Thank God for the comments. So it's my 2 cents. Nick?
Yeah, I mean, and Armand knows this as much as anyone, but, just in a past like professional realm have, garnered hundreds of millions, if not billions of visits to websites purely on promoting content that has a specific headline, and it's built and split tested thousands of different ways, shown to be statistically significant, and A/B tested every which way to make sure that you click on it. And that is how the current business model on the internet works. And so, every time I see a good headline that I'm about to click on, I'm like, that's a really good headline. That's probably getting a really high click-through rate. And so I think it's, I don't see content anymore. I see business models. Whenever I see something that's so good that you want to click on it, you're like, I know how that person's making money. So I think it's important to understand the incentives of the person who's feeding you the content. And that's why, often people refer to successful people for advice because, they maybe aren't necessarily providing the content to you to make money. That's just their point of view. They may have like a grander political incentive to get you to come towards their viewpoint, but like in that case, the market of ideas should win out. But when you look at like any given website, even the New York Times, the Washington Post, the Wall Street Journal, Pulitzer winning publications, they are incentivized to get you to click, view ads, or buy a subscription. So I think it's important to understand, the incentives of the people putting the content out there.
What a great clip that would make as the clipper of the group. What a great clip that makes. But my question back to you, dude, is like, okay, so you understand that like most of these headlines are business models or whatever, but like you still are seeking news and truth as an individual, as a human. So like, where do you find that stuff? You, Nick, because like Eric, I'm going to find that in a different place probably. And I actually want to know from like all of us, where do we find our versions of truth in a world where like there's noise fucking everywhere and the signal is so fucking vapid and fleeting? Like, where do you find it?
Yeah. I mean, I think like having a good social circle is actually a good filter for this. Like I use you guys as a filter. Like if it got through you guys, then I know it's like somewhat vetted, right? Someone at least looked at it and was like, this is interesting. And it probably came from a good source. So it's good to have like a nice community of people, whether they're in person or like digital, to kind of help you filter that. But that being said, there's still some issues. I think in general, the longer form that you can read, the better. I'll be honest, I read less books than I used to, and I read more periodicals and essays. I find them a little more, like a lot of books should just be essays, like 5 pages on like why this argument exists. And so, I mean, I've mentioned Foreign Affairs before, The Economist, or even like Council on Foreign Relations in general. They put out good podcasts as well. So I think like periodicals and essays are kind of my zone of where it takes effort. It's not, 128 characters. It's not a blog post. It's not they tend not to be clickbaity. And then you got to find them from the right people. And like, you're never going to get around the incentive problem. Everyone's going to have some incentive to do something with you. You just have to understand where it's coming from. So the first thing I realized, like when I read a foreign affairs article, usually in the magazine, in the bottom left, they have like a 3-person byline. And you typically find someone in office, in a company, in a think tank, or maybe someone who's in prior office. The best ones are the people who just got out of power. So like ex-CFTC chairman, he didn't have a job yet, but he just got out of power. He can let you know how he really feels. He's probably even putting out his ideas, on market for his next gig. Or a senator of like a finance committee that is no longer a senator anymore. Those people I feel like are these brief moments where you get to hear what it really is like and what's really going on. I don't know. I guess that's what I try to do. And Twitter's a fucking minefield. So you got to cut more than you add.
Yeah. I
think in that area. And I wish I could turn off this feature on Twitter where it shows you posts of the person you're following, what they liked. I don't want that. I just want
you're
their
not
content.
supposed to look at your
what they like.
You're not supposed to look at your home feed.
Oh, am I doing it wrong?
Yeah, you don't look at your home feed.
Okay.
No home feed.
Okay.
Lists only.
Next in-person night, you gotta give me a tutorial.
Yeah, the home feed is garbage on Twitter because it gives you all this stuff that you didn't ask for. What you want.
Exactly what
it's garbage. That's why I create those lists. Like I have the crypto one, the politics one, the podcasters one, God. And then I only look at those. And TweetDeck or whatever. I was going to ask you guys one time if you guys ever use TweetDeck, because
I remember that.
Because you can have your personal up, you can have the Alfalfa one up, you can have like all the things. It'll show you everything like however you want it. Like this is what's been liked, or here are your lists, and here are your DMs, all in one like browser screen. What you said, Nick, about incentives and people is really interesting and really important. It's like, clearly, most people today have become aware of like the matrix levels that Stephen was referring to when it comes to the news. Trust in the news, all-time low, just like Biden's approval rating. So the like situation is that people have moved on to citizen journalists and podcasts, but even those have really bothered me lately. Like where I'm starting to lose trust with a lot of these people, because again, you have to take the time to go to the byline to understand what they do. And oftentimes all they're doing, their incentive is just to like sell you into their mastermind or sell you on their NFT that they're about to launch. And I'm not going to call people out by names because there's some people I admire who do this stuff. And I get it, because the real incentive, they're living in a capitalist world. Like we're all capitalists. Like we have to survive. We have to make money. You have to build a business. Like I get it. So I think like the root thing that I always land on is like, can we adjust these incentives at all? Is there like a new modern version of capitalism? Because I do like capitalism that maybe is a little bit more aligned with like people as well as profit. Not the like super, people over profit version, or like the non-profit version, or like the B corporation version, but just something that at least acknowledges like the health and the prosperity of human beings alongside profit. Maybe not. Maybe it doesn't exist. Maybe the model isn't possible.
I hear you.
I don't know.
It's a great question. I'm terrified to start unpacking that now, because I feel like we're gonna go another 5 hours if we unpack that. That's pretty deep. We should.
I mean, unpack a little. Yeah.
We should put a pin in that a little bit. I mean, give them a little taste if you want.
I think it starts with our listeners in a weird way, because I think it does. because like I've been the guy writing the goddamn headlines and whatever for our clips, and like what I've learned in a very short amount of time is that it's not like, hey, why we're bullish ETH. It's like, why ETH is going to 25K. It's like that is the way you like write things. But like maybe we can change the game in that, like, you know, we can be radically moderate, not only in political views, but in like business and like everything, where it's like you don't need to be so fucking polarizing to get clicks and to get, you know, like.
I agree, and maybe we can end on this, but you know, kind of to our listeners and talking about why people get people in communities, and like I will let you know that we don't have any incentives. The one reason we want people in the Discord is because we talked about this yesterday, or on Sunday. This is important, we want just more people like us to talk to, like that's it. So you know, maybe we can kind of lead the way and just you know, we don't have any like real incentives. It's just we want more people like us to chat with and red team our ideas and bring up new ideas and keep the thought kind of spicy and up to date and everyone there.
I love that we landed on that.
Yeah,
it felt so good because like we were trying to figure out like, okay, what do we all want here? Like, what's the purpose of this, and why would, like, is it you know, deal flow or your brand, or what is it? And like literally where we landed was like, how incredible would it be to have like a huge Discord community full of like like who we are and the way we think, and access to the information that we have filtered. So it's back to that point that Nick made about for me, you guys are my filter for information. So if you just had a bunch of people that think the same way, that have the same ability to filter information, parse out truth, signal from noise, to Steven's point, and then share that and have a take on it and throw it in the Discord, and then you could have a meetup and everyone's discussing these things and they all are like purple pilled and radically moderate. Not that they all have to be radically moderate, but if they all are somewhat in line with that type of thinking, how fucking cool is that? And that's where we landed. It was like, wow. Then from there, like anything is possible. Whatever we want to create, whatever we want to do. That's a beautiful thing. Steven, I feel like you still want to say something about the previous. Yeah.
What was your previous thing? You were yearning for a new model of capitalism that takes into account other things.
Yes.
Like gross. I mean, we're already moving towards that, aren't we? Right? Like the market 100 years ago, the only discovery mechanism it had to optimize for was like price. That's already different in this day and age, obviously. Like as we like network more together as humans, as social media becomes a thing, right? You've already seen brands optimize for things other than like, and you could make the argument that they are actually optimizing for price in the long run. They're just doing it in a different sort of more socially conscious way. But they are taking stuff into account other than like who wants to buy this widget at XYZ price and what is the optimal way to sell the widget. That's why so many corporations now have this sort of like huge PR arm that's doing like, you know, social justice stuff or whatever the hot topic of the day is, because they're trying to tap into that. And yeah, they're trying to sell more stuff, but they realize that like the new generation of humans does care more about other than just getting like the best like widget for like the lowest price. That's like not something like our generation cares about. I think the younger generations care about that even less, and that's probably just going to keep happening. So I think we are moving in that direction. As to your point about the Discord, I think this is what you meant to say, but like I think what we're not looking for like people who think like us. We totally want people who think nothing like us. I think it'd be like way more interesting. But like you want people that are motivated by like the same sort of end goal, which is like this sort of like higher pursuit of like truth in the world, right?
Well, that's how we think. You can
come at that.
That's what I mean for sure. Like
I know that's what you mean. I know that's what you mean. But yeah, like you don't want a Discord full of like a whole bunch of like down the center modern. It'd be very boring. It'd be a very boring place. Like of course you want some like radical leftists, but like who are like in good faith pursuing like the same objective. I mean, that's
Truth
the
seekers,
spice
man.
of life there. Yes.
Yeah, for sure.
Truth seekers.
Truth seekers, people that think like us in terms of how they process and disseminate information. Yeah.
Yes.
Which is not an easy task. All right. Beautiful. I like this. All right, guys. I think that's a wrap. Thanks for tuning in, everybody. Hop in the Discord, alfalfapod.com. Leave us a review on Apple Podcasts. Subscribe to the YouTubes. Share with your friends. Spread the word. We'll see you next time. Peace.
Bye.